Welcome to Module 2, Revenue and Expenses. Module 2 is one of the fun ones that I think a lot of students enjoy because they get to look at critically where sport organizations make their money and where their expenses are. Think of it like yourself at home. Do you have revenue? Well, if you have a job or if you're getting money from your parents or from a loan, that's your revenue. If you make more, if you get a raise, that increases your ability to buy things. In the same situation, if you don't have any money coming in, that affects your ability to buy things as well. So when we look at revenue and expenses, we're always taking a look at various times, there's going to be different levels of revenue and different levels of expenses. Just like if you're going to be buying a car, that's going to increase your expenses significantly at that point, and then you have to have ongoing expenses associated with maintaining it and putting gas in it, buying insurance, things like that. Similarly, if you build a $1 billion stadium, a large part of the cost of that $1 billion stadium is after the fact, after that billion has been spent. It's on the salaries, the millions and millions of dollars being spent every year on salary of employees who are going to be working there for the next 50 years that it is in existence. So when we start taking a look at revenue and expenses, you have to look at it in a broader picture, and that's what this module is designed to do. So when we start taking a look at revenue, you can look at so many different areas that are covered in this module. For example, ticket sales. You might have broadcast revenue. You might have concession sales. You might have entry fees. You might have monthly membership fees for a health club. You might have endowment where people give you money. You might have planned giving where people die and they leave money to a nonprofit organization for them to spend on different things. There are just numerous ways that you can get revenue. Expenses. Similarly, there are numerous ways that you can face expenses. They can be expenses associated with, as an example, let's say a stadium. You're going to have the people that have to clean it up. You have to have the people that are going to be working concessions. Unless you outsource it, then part of the money that you receive, you have to give to somebody else who has been providing all the food and labor and stuff like that. You're going to have electrical expenses, gas expenses. You're going to have waste removal and water expenses. It's incredible how much stadiums pay for water every year to water their grass. But then in the same vein, you're going to have to look at, for example, the cost for seeds, the cost for pesticides, the cost for lawnmowers and maintaining those lawnmowers, and for the gas to operate those lawnmowers, and then repairs for the lawnmowers. You're going to have to take a look at expenses associated with the front office, with the advertising expense, with your personnel expense, with printing tickets, advertising on radio versus online advertising. What's going to be more expensive that's going to give you the biggest bang for the buck? So you might want to do TV, but if you don't have good response rate, then maybe that huge expense might not be worth it. You might need something else. So there are countless types of revenues and expenses, and we'll be looking at some of them throughout this module. Athletic departments, high school versus college, similar expense type of lines that might be there for coaches and stuff like that. At the college level, you might have to take a look at athletic training rooms. You might have to take a look at a sport information department. All those different kinds of expenses, plus all the revenue or lack thereof. What if you only charge $2 a ticket to go to a football game and very few students show up? Well, that's going to impact you. So that becomes part of this analysis that we're going to be looking at revenue and expenses. Now, is there something that's called a good expense? Well, yeah, if you get a good rate of return on that expense, that's a good expense. If it helps you grow, just like getting a degree. If you're getting a degree and that degree is going to help you get a better job or help you increase the salary that you're going to be receiving, then that's a phenomenal benefit. If you're going to get a degree in, let's say, underwater basket weaving, that's not going to help you out in your career, but you just really like it, well, it's an expense. You might have enjoyed that, but is it considered a good expense that's going to result in positive net cash flow coming in? Maybe not. A good example of this is the National Guard spending millions and millions of dollars to sponsor NASCAR racing, and that's one of the examples that's in this module. Take a look at it. Do you think it was a good investment on their part? I mean, their response rate was pretty low, but the question is did it look good? Is it good to have your name out there and people can associate with you with something that's going on, and that might be a positive correlation. That might have value But if you can't put a figure on it and can't prove the value, it's going to be hard to justify that as a good expense. How to track revenue and expenses. This is done very easily now with online systems where they might scan every receipt that you have and put it down. They might use a system such as Quicken, which will help you take a look at what's going on with a small company. Larger companies, it's a lot more dynamic because you have expense maybe throughout the world in different currencies, different bank exchange rates. You might have some people working on different yearly calendars, some maybe June 30th and then starting again July 1st. Others might be in August, some might be December, January timeframe. And then trying to reconcile that could be quite a challenge. And that becomes one of the parts of having a strong team that can get you this information as soon as possible. So if you fill out a form, for example, that you're going to be spending $10,000, where does that go within the organization? So that way it works its way throughout the entire organization so it gets proper approval, gets deducted from your account, so you know immediately that you've spent that money without looking at it a month or two later and not realizing whether or not the expense has been cleared from your area and whether or not you exactly know what your expenses have been that have been paid so you can really determine your revenue and expenses for that time period. Other things that you should understand, a lot of revenue and expenses can overlap. For example, if you are taxed, a lot of athletes are taxed, whether it's municipal taxes, state taxes, things like that. The taxing authority is getting revenue. The players are paying taxes, that's an expense for them. So whenever you have a revenue for someone, it often will be an expense for somebody else. And that might be someone that's not alive, if it's an estate, if someone has donated money. But think of it like you going to the store and you're buying a Coca-Cola at the store. You're giving them revenue. Well, they had an expense to buy that Coke. You had expense to buy that Coke. And so that's part of this economic engine, and that's the financial chain that exists when you have a situation like that. So they're going to have to take your money. Did you pay on credit card? Are they going to get it immediately? Did you pay in cash? Will they get that immediately? Yes, they will. What if you pay in check? How long will it take for the check to clear? And then, so the revenue might be something that they get immediately, or might not be something they get immediately. And it might be they get something further down the road, but then they have the expense. If they bought the Coke and that was 30 days ago, they might owe money on it right now. You, by buying that Coke, you either incur the expense right now if you give them the cash, or it might be a day or two if it's a check, or it might be a credit card where now you have 30 days to play with, possibly to pay it back. And so that's where it can overlap between revenue and expenses. Whatever you do, you should always look at this, that there is a strategy. You don't undertake revenue growth if the expense is going to be too high. It's not like in the stock market where some of the worst investors buy high and sell low. You want to spend as little as possible with the ability to turn that into the greatest amount of revenue possible, and that's the strategy. That's why you have to take a look at whether or not an expense will necessarily generate the revenue that you anticipate, and that's why planning is so critical. The last thing I'm going to cover in Module 2, as this introductory video goes, is look at the fact that nonprofits can make revenue. They can make bucketfuls of revenue, and that's not against the law. The NCAA earned over $1 billion last year, and they distributed a lot of it to their member schools, of course, but they're a nonprofit organization. If you look at Special Olympics, they could generate a bucket full of money as well. You look at the Ice Bucket Challenge and ALS Research. They were able to generate hundreds of millions of dollars through that campaign. That's a phenomenal opportunity for them. You can make money as a nonprofit. The question becomes, how do you spend that money? If you invest in more programs, great. If you invest in research, great. If you have salaries that are high, that's acceptable. There are a number of individuals who are CEOs or directors of major nonprofits who earn way more than $1 million a year. That's not against the rules. The question is, you can't use it for for-profit motives. and that is where a nonprofit can get into trouble. Also, if you make money from doing activity which is normally considered a for-profit activity, then you can actually be taxed and lose your tax-exempt status as it relates to that income. And that occurred to Ohio State in the Mobile Cotton Bowl, where the IRS came forward and said, this is unrelated business income tax. You guys are doing actually marketing rather than education. And as such, we're going to tax you at, I think it's 28% tax. They weren't anticipating paying that tax, but they had to pay that tax. So revenue and expenses is a great area, a lot of creativity here, and I hope you enjoy this module, and I look forward to seeing you in Module 3. Take care. Bye-bye.